All right, welcome to The Explainer. Today, we're going to tackle a system that, quietly shapes the entire global economy. It's called the petrodollar, and it gives the United States a power that one very famous leader called an exorbitant privilege. We're going to break down exactly how this whole thing works.
So let's just dive right in with that phrase, shall we? Because it really captures the tension at the heart of this whole story perfectly. Way before the system we have today was even a thing, French President Charles de Gaulle, he used these exact words to describe the incredible power the US dollar already had. He saw it plain as day. Having the world's go-to currency gave America what he thought was a totally unfair advantage. And that right there, that's the central question, isn't it? How did a deal about selling oil in dollars lead to this unique global power? To figure this out, we're actually not going to start with oil or big picture geopolitics. Nope. We're going to start with a surprisingly common problem, a headache that every major financial manager in the world has to deal with.
All right, so let's zoom right in on this dilemma. It's a fundamental challenge that basically every government and big corporation has to solve, month after month. So imagine this. You're the treasurer for a small country. You've got these massive cash reserves just sitting there, billions of dollars, waiting to be paid out for things like salaries. Now, you can't just let that cash sit in a vault, right? Because inflation is just eating away at its value every single day. You've got to invest it somewhere safe, but, and this is key, you also have to be able to get it back, instantly.
Okay, so your first thought might be, hey, I'll just invest in my own country's bonds. Makes sense. But here's the problem. If your country is small, its bond market is also going to be small. And that creates a huge issue. When payroll day comes around and you need that cash, you have to sell a massive chunk of those bonds all at once. And what happens? You completely flood your own market. The price just tanks and suddenly you can't raise the money you need. It's a total disaster. So what you desperately need is something called liquidity. You need a market with high liquidity, a place that's just so big with so many buyers and sellers all the time that you can sell off your assets in a flash without anyone even blinking. And right along with that, you need something called market depth. This is what makes sure that even a transaction as huge as a small country's payroll won't even cause a tiny ripple in the price. I mean, you can sell billions and the price just stays stable. So here's where it gets really interesting, right? You're looking at this stark choice. On one side, you have your own small, kind of risky national market. And on the other, you have the US debt market. We're talking the biggest, deepest, most liquid financial market on the entire planet. So if you're that treasurer and your job is to protect your country's money, well, it's not really a choice at all, is it? You pretty much have to go with US debt. And that one simple, logical choice made by treasurers all over the world ends up creating this powerful, self-reinforcing cycle. Let's take a look at how that works.
Yeah, it's a classic network effect. I mean, think about a social media platform, right? The more people who use it, the more useful it becomes, which just brings in even more people. It's the same idea here. Safety attracts more investment, which in turn creates more safety, which then attracts even more investment. It just snowballs.
Okay, but wait a minute. We've just been talking about a purely financial system, right? It's all based on safety and size. This seems to have absolutely nothing to do with oil. So why on earth do we call it the petrodollar? Well, that's because there's a huge, crucial piece of the puzzle still missing. And the answer, it lies in a global crisis from the 1970s, a crisis that completely reshaped international trade and, well, created that final, absolutely necessary ingredient for this whole system to lock into place. See, a market that's based only on financial instruments, just paper, is always going to be a bit unstable. It's always at risk of creating bubbles. To get real long-term stability, this winner-take-all system needed to be anchored to something, well, real. A physical commodity. But the thing is, before 1973, there was just no single commodity market out there that was big enough to do the job. And this is the moment everything changed. The 1973 oil crisis hit, and it sent prices just skyrocketing. We're talking nearly 400% in just 6 months. The cost of a single barrel of oil jumped from under $3 to over $11. I mean, it was just unbelievable. Suddenly, almost overnight, the global oil market became unimaginably massive, and this crisis, completely by accident, created the perfect, huge physical foundation, that substrate, that was needed to anchor the financial system we were just talking about. The missing piece had finally arrived.
And the United States saw this historic opportunity and seized it. A deal was made with Saudi Arabia to price all of its oil sales exclusively in US dollars. And that was the masterstroke. It officially linked the world's biggest financial market, US debt, to what was now the world's biggest commodity market, oil. And just like that, the petrodollar system was born. Okay, so let's connect all the dots here. What does this really clever combination of finance and oil actually mean for the United States? What's the payoff? Well, this brings us right back full circle to Charles de Gaulle's phrase. It's not just a clever observation anymore, is it? Now it's a description of a very specific mechanism. See, every country needs dollars to buy oil, and then they need a super safe place to park all those dollars they're holding. And what is that safe place? Yep, US debt. And here they are, the privileges. This whole system creates what is basically an infinite global demand for US government debt. So what does that mean? It means the US can borrow just staggering amounts of money at incredibly low interest rates. This lets it fund its government and outspend any geopolitical rival in a way that, frankly, no other country could even dream of. And this really gets to the core of it all. While a lot of countries might really dislike this whole setup, they're pretty much completely locked into it. Why? Well, it all goes back to that treasurer's dilemma we started with. At the end of the day, there is just no other market on the planet that offers the kind of safety, liquidity, and depth that you need to manage a country's finances. And so that leaves us with one final and kind of provocative thought to chew on. For 50 years now, this system has been the absolute bedrock of global finance and American power. The entire world, whether they like it or not, really depends on its stability. So the most important question now, the one we all have to ask, is what happens to us if it ever starts to unravel?